Hello traders. The title of the video is a Canadian stock index wave trader answers specific wave trading question. Traders have been asking difficult questions after watching the prior video that are titled Toronto Elliott wave trader explain his Toronto Composite index wave analysis. Check it out, please, because the video that I'm about to record is related to that video that I titled Toronto Elliott wave trader explains his Toronto Composite index wave analysis. After watching that video, traders were asking a difficult question. Those are relevant specific questions that we will try to answer in this tutorial. Let's get started, all right? So in a prior video, talking about my Elliott wave forecast, so we say that for here we have a first mana wave, second mana wave, third mana wave, fourth mana wave, and a fifth mana wave. And whenever we count 1, 2, 3, 4, 5, it becomes 1, which is the red one there. You see the one there, red 1, that's 1, 2, 3, 4, 5 becomes 1, okay? So we call that the first wave of a higher degree. And now we see that the price started going ups and down in a triangle. So today we are here. We are here today. Well, at that point in time, I draw that blue line. You see the blue line, 14156. And I said to traders, priority to bullish signal above that level, 14156, and priority to bearish signal below that level, all right? So before I start answering those questions, I would like to explain to traders how you handle that, because whether we are using the Elliott wave forecast or Elliott wave pattern, we will combine it what we call a different time frame trading method. All right. So the market pattern, talking about the 6 biggest trading mistakes at dayprotrader.com. All right, one of the biggest trading mistake is the violation of the market pattern. So when we are in a trending phase, or when we are an impulse wave, when we are in a first wave or third wave or fifth wave, the price will be retesting a trend line. All right, and or the price will be in a rising channel, in an uptrend, or will be in a declining channel. All right, and we don't want to violate the market pattern. So if you are here, you will start drawing trend line like this. You see this trend line? All right, that's how you're going to trade it, because you don't want to violate the market pattern. So that's the first trend line. Then we draw another trend line like this. So the second trend line are connected to this point and this one here. You can see that the price came back and retested here. So pull back to retest, common trend line is broken, implement a top-down trading method. Here again, it went up, okay, it pulled back again, retest the same trend line, the common trend line here is broken, implement a top-down trading method. You can see it came back again here, it retested, common trend line is broken, okay, implement top-down trading method. It went up just a little bit before crashing below it and going back above it. So the violation of the market pattern is one of the biggest trading mistakes, and as an Elliott wave trader, we don't want to do that, because after doing your Elliott wave analysis, you don't want to make mistakes. So again here, you see this trend line, the price was retesting that trend line, the price was in a rising channel. There are 3 specific market patterns: the rising channel, declining channel, and the horizontal channel, or the triangle, all right? Or the triangle, all right? So the violation of the market pattern, we don't want to get into that mistake, okay? So all in all, it's talking about a top-down trading method. You want to know more, just you to search the phrase, okay, top-down trading method, okay, or mastering a top-down trading method by 24 Stock Trader YouTube channel, and you will see a playlist, okay, on YouTube, all right? So today, where are we? Which market pattern do we have? So the question you want to ask all the time and every time without forgetting, all right? So sometimes we may know something, but we can forget to apply. So the current market pattern for somebody that is trading the Toronto index is what? A triangle. That's the gigantic triangle there on my chart, all right? And it's a consolidation. Blah, 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 blah. Now we are here, all right? So people are buying. In theory, they are looking for an opportunity to buy on the edge of the lower part of the consolidation. All right, that's what they are doing here. So we are again at the lower part. When they buy here, the midpoint target is the median line, and the ultimate target is the top of the consolidation. So suppose you were here, all right? So the top-down trading method is a multiple time frame trading method. So, for instance, you on a monthly chart, your signal time frame will be the daily chart, and your entry time frame will be hourly time frame. But generally speaking, multiple time frame trading method or top-down trading method consists of using at least 2 time frames. So, for instance, like I was telling traders, I put in a comment section hold on please, I want to remove this vertical line, put it aside a bit, or I see. So this is the month of January. So you can see that people were buying, as I told you, above 14156, and they are pushing it up. The price is now at a resistance level. You see that red resistance? That's where the price did. You see this resistance here? People showed it there before the price went down. In the same zone, they showed it before, and now it come back there. So what should I say to trader today? Where we are now, the price now at a 15303, a very important resistance level, or I will say to trader again, priority to bearish signal below 15303, and priority to bullish signal above that. If you are buying above that level, be careful, be aware of the median line of the triangle. You see, it's a median line. So the price always going from one key level, 14156. Now it's at a resistance level, 15303. When the price going up, the price looking for a better resistance level. All right. When the price going down, the price looking for a better support level. So priority to bullish signal above 15303, and priority to bullish signal above, and priority to bearish signal below that red line there. All right. I'm recording this video today on the 20th of January 2019. All right. So the time in London is 5 minutes past 4 p.m. All right. See down. So that's it. All right. So that's the best. So suppose you were here, as I was telling you, prior to bullish signal above, and we are talking about consolidation, top-down trading method. If you go, for instance, which is the daily chart, the entry time frame, for somebody who is day trading, day trader saw a kind of, it's not very clear, you can see here, it come down to that level. Yeah, it went above that 14156 and retested here. So for those that are applying the top-down trading method, after this currency bar is closed, in January, in fact, on the 3rd of January, we on the daily chart, it retested here. So after that day, you see, that's your signal. This is your signal here. Break a bow, all right. Now you see, in fact, it retested here first time. It went up, gap down to retest this level here. The signal is break your signal. So the signal, in fact, they say, what is the signal? The signal is another trading setup, but on the signal time frame. So first you see a trading setup on a monthly chart. Okay, let me explain this to traders, because some traders ask me that question. Joel, what is your signal? The signal is another trading setup that is occurring on the signal time frame. So originally on a monthly chart, our trading setup is a consolidation, price going from the top to the low. So as this candlestick by the red one come here and close, we have a bullish trading setup. That's it. We draw the line 14156, price to bullish signal above, price to bearish signal below. What is the signal time frame? Daily time frame. So the signal is another bullish trading setup in the same zone. Have you seen on the signal time frame another bullish trading setup? Yes. Break above again, the same zone, and retest. That's the signal. The entry will be another bullish trading setup on the entry time frame, which will be the hourly time frame. So if, for instance, somebody who is on the daily chart see a trading setup, that's the trading setup, The signal time frame for the daily chart is hourly time frame. What is the signal? It's another bullish trading setup on the hourly time frame. And the entry will be another bullish trading setup on the 10-minute time frame. Somebody who is looking for a bullish trading setup on the 4-hour time frame, it goes to the signal time frame, 50-minute time frame. The signal will be another bullish trading setup on the 50-minute time frame in the same zone, and so on and so on. Or if you couldn't enter here, all right, you miss it, there will be another pullback, a retest or breakable retest above that level or the following, okay, bullish trading setup. The same thing is true for the bearish trading setup. The bearish trading signal is the bearish trading setup that is generated by the bearish trading setup on the signal time frame. Is it clear? All right, okay. So this is it. So you see now, so hold on please. So because we come on the daily chart, if you miss this one now, all right, if you, what I said to you, multiple time frame trading method or top-down trading method, generally speaking, don't forget that. If you forget everything about top-down trading method, remember this. It consists of using at least 2 time frames, at least. So suppose you don't know about that daily chart, hourly time frame, 10-minute time frame, so, or you don't know about monthly chart, daily chart, hourly time frame, all right. But just remember that it consists of using at least 2 time frames. So what I say in the comment section, when because it's not very clear for a lot of traders that there is a signal there. If we go to the 2-hour time frame, all right, you see, we have a clear cut, all right, see here, all right. You see a clear cut. Hold it please, traders. You see a clear cut inverted head and shoulder chart pattern. It's a bullish chart pattern. Inverted is the head, it's the right hand side shoulder. Another may say it's this one the right, the left hand side shoulder, that's fine. You may say this is the left hand side shoulder. Another trader may say this is this one. This is the head, this is the hand. It's a bullish chart pattern that is formed at a support level. So there was a bullish trading setup on the monthly chart, talking about using at least 2 time frame. Somebody that comes to the 2-hour time frame see that, all right, we have a bullish trading setup on the monthly chart. Now when I switch to the 2-hour time frame, I see a bullish chart pattern. It's this is here. Yeah, this is a signal here. Another signal for somebody that is combining the monthly chart and the 2-hour time frame. And from there, it starts running again. All right? It's running. There could be other bullish signal after this one. So the first, those who spot it first will enter here. There could be, you see, now he didn't pull back very much here. He just ran. Why is running? So I also mentioned to traders that ask me the question, which we're going to answer in this tutorial. Stay with me, please. See. So professional, I say to trader, the price does not go up or down for no reason. It's always headed to specific target level. All right. Because of that inverted head and shoulder chart pattern on the 2-hour time frame, those that have spotted this, they will say their target like this. You see, that target is very close to that resistance, the red line. You see, so when you have a target like this, a little bit below a resistance level, the market, the professional trader will push it, will prefer to bring it to the better resistance level. You remember what I said? When the price is going up, the price is looking for a better resistance level. So sometimes the price will ignore the target and go beyond it. Why? Because sometimes we have a better resistance ahead. Sometimes in the downtrend, you may have the target, but if there is a better support below, sometimes they will push it to the better target level before you may see a kind of pullback. All right? So all in all, it's a consolidation play on the monthly chart. Where we are now, we are in a target level. Those who bought it here, swing trading, may take some profit, which will be healthy. So it will be healthy if you see something like this, a pullback to where? A support level. We are working with what? Always with support and resistance level. So there are support here. See, you do support here. You draw them. Those are possible points if there will be, I'm choosing my word carefully, if there will be a pullback. They pull back and retest that level of 15044 or even 14907. It may not pull back at all and continue to go up. But it will only pull back here if there is a signal to sell. But we know that there is a target level there. So the reason why you want to know where is the target, where is the resistance level, all right, where is the support, where is the target level in the downtrend, so you may know where are the points where you can look for the setup and understand what is happening now. So in my mind, I know that there's a target there. You see, they know that's why it probably went out, it gap up, on the 2 hours, it went up to that. And you just stop at that resistance level or acknowledging that resistance level. Prior to bullish signal above and prior to bearish signal below that level. Break above, retest, or bullish chart pattern, implement a different time frame trading method. Now, a trader said to me, George, I am a new trader. That's why I think maybe my question is not relevant. Don't say that. Don't say that. Whether you are a new trader, all right, or freshly baked technical trader, you can still ask questions on our channel. Traders that ask questions improve their trading. So just ask the question. Sometimes I may not record a specific video to answer your question, or I may not fully answer your question today, but stay with us. I may answer the question on another channel, for instance, Depot Trader channel, or 24 Forex Trader, or 24 Stock Trader channel, or Joe Trio channel. All right, you see, that's what we are doing, okay? So the questions that traders were asking, so were relevant questions. All right. One of the questions was that, all right, is the Toronto Composite, has the Toronto Composite bottom at the blue line, because we put this to the second wave there. The correct answer is maybe. It looks like it has bottom because they start buying here. What do you mean by bottom? It means that it found a support, yes or no. So we can say that it has bottom here where my cursor is, yes or no. So it's going down. If you see bottom, it means that it's going down fast and now it stopped going down. That's why we remember it has bottom. So here we may say it has bottom here. So to answer your question is that if, for instance, we were here at the time when I was recording a video, I would say to you, I would draw another line there, and I would say priority to bullish signal above and priority to bearish signal below. You may say, oh, is this the end of the second wave? I would say to you, maybe. But here we are again talking about the second wave here, because the consolidation is prolonged, it's extended, it just keeps going up, it's just oscillating up and down. So originally, for Smith, who asked the question, a trader called Smith, I will not say his full name, originally, all right, if you were here, all right, if you were here, so you count, you see, 1, 2, 3, 4, 5, that's why I say the Elliott wave count is one step at a time. Do not remove your drawing on the chart, flow with the price, and do not violate the market pattern. So if you were here and the price pull back like this, well, what will you be telling, or what will I be telling traders at this junction? You see, if you were here. Again, we see that you say 1, 2, 3, 4, 5 become 1, and then we say, oh, all right, probably this is the end of the second wave, yes or no? And then we draw the line again, and we say prior to bullish signal above and below, and so on, okay? And then we say, probably this is the beginning of the third wave. It's correct to say that. A third wave can fail. Not only that, a second wave can become a complex second wave. So it's not a mistake to say at this junction that this is the end of the second wave, or to think that is the end of the second wave. But though you are thinking that, just understand that we can have a complex second wave, and you just flow with the price, you see. That's why that phrase, flow with the price, is too important for Elliott wave traders. Today, again, you see, after calling this second wave, which trader did, see, they start by here, they say third wave, but it didn't happen. They come back, down. And now, here again, they say, probably here they will say, oh, end of the second wave. Or somewhere here they say, oh, blah, blah, blah. But once it did 1, 2, 3, okay, so they will start thinking of A, B, C, D, E. Correct wave. So they say A, B, C, D, E. So they are here now. They say, all right, Joe, this is A, B, C, D, E. This is the beginning of the third wave. It's not a mistake to say that. All right, but here it is. It went up only to come back down. So A, B, C, D, E, what? F. And you say, George, there's no A, B, C, D, E, F. No, there's only A, B, C, D, E triangle. But that triangle can be prolonged, which means the price can continue to oscillate. So you have to understand that when they were writing about the alien way, it's an observation. The gentleman cannot write everything and say, oh, sometime, blah, blah, blah. It will be too long. The same thing you write in a trading system, you can't write everything. You write the most important thing. All right, so again, when you hear people say, end of the second wave, again, today we are saying, probably, so to your question, probably, this is finally the bottom of the second wave. We will find out. If it is, it will break above the triangle and find a support, and we will be extended. But like I said to traders, as always, whenever we see a triangle, anything is possible. It can break below it and continue. So your question, there was another question you asked. It said, if we finally have, okay, the third wave and the fourth wave, will the fourth wave go below the second wave? That will be an alien wave violation, all right? It will be a deep retracement, which means the fourth wave will be overlapping probably the first wave. Or if you call this the second wave, you can assume, you can only expect. But what I'm saying to trader is this. You want to make sure you get paid. And to get paid, you want to analyze the chart. You do not want to violate the market pattern, and you want to implement a different time frame trading method to control it. Any way trader that has been doing that will get paid, because once it becomes clear here, you see, that's what they are doing here now. That's exactly what they are doing here. They are just playing with the market pattern now. They sold it there. So you see, that's what they are playing now. They are just playing the consolidation. All right. See, so I didn't say anything in that video about the fourth wave, because we cannot talk about the fourth wave yet, because we haven't seen yet the third wave. We can only start talking about the fourth wave when we see the third wave. So that's why I'm very careful not to go blah, 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 try to impress traders. All right. So we see it now. That's what we got. We are working with that today. All right. We stay very calm and we just flow with reply. If there are more information, we come back again. We record another video and give additional information, because too much information can be confusing to traders. You can go into all kind of measuring the width of the triangle, projecting it up using market geometry, or projecting it down, and so on. That could be. If it is happening, I will definitely come back again and record a video. If it breaks above it and find a support, start running away, you can remind me in the comment section, and we'll come back again and look at it. All right. Mary, am I pronouncing your name correctly? Mary, okay. Also asked me, he said, is this the forecast? Yes, it is the forecast. All right. So he said to me, George, I'm a new trader. Don't worry about it. It is the forecast. Now, my approach, all right, I need to explain myself a little bit more so that they may understand what I'm trying to do. We got 5 minutes now. So my approach is a prudent approach, a cautious approach, all right? All right? So I don't want to rush. I don't want to give too much information. I want to give to traders what they can work with so they may get paid. That's what I do care about. You see? So you may say, Joe, you didn't tell me how far the third wave will go. Yes, in fact, Smith also asked the question, if the third wave has started, how far will it go? Be patient. We will talk about that when the third wave starting. Now, we are in a triangle. We just stay with the triangle for now. That's all. When the triangle tries, if it fails, it goes below it, we'll come back and talk about it. If it goes above it, we see that, okay, it goes beyond the 161.8%, or it reaches the 161.8% Fibonacci extension level of that first wave of a higher degree, all right? We will start talking about the third wave, all right? If you start at least if it goes above the 138.2% Fibonacci extension level of the first wave, and that triangle, that's where the junction, the price telling us, with that triangle is saying to us, George, wait, don't say too much. tell them at this junction to concentrate on the consolidation. And that's the best approach today. All right? So we are not talking about the third wave now. We will not talk about the fourth wave yet. All right? This is the forecast. The forecast is that there's a high chance, right? There's a high chance that we go out from here and we try to reach the median line. And if you find a support above the median line, you go to the top. That's the forecast today. Probably this is the end of the second wave, but if the oscillation continue, that second wave may be extended, which means we see more consolidation going on. So, with the information that I have today, to avoid that traders make a lot of mistakes, this is the forecast. You will say, oh, John, what kind of forecast is this? We have the first wave. We are now in something that looks like the second wave. In the prior video, I also said to you, what is going on here? Maybe it's a portion of an extended third wave. But again, we can't confirm it yet. So we just stay calm and wait until everything becomes clear. I hope I have managed to answer all the questions. I don't want to go over 30 minutes. You see 26 minutes now. So I will stop now. If you have any more questions, just leave it in the comment section. I'll come back to you, okay? All right? If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. If you think it's an essential tutorial that can help other Elliott traders, feel free to share with your friend on Google+, Twitter, and Facebook. All right? Our YouTube channel is 24 Elliott Waves. Subscribe today and be sure to click on the notification bell. Sometime I post video first on Facebook. My Facebook page is stochastic-market. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about a Canadian stock index wave trader answers specific wave trading question. All right. Thank you, Mary. Thank you, Smith, for putting me under pressure to explain my wave analysis. All right. If you want to know more about Elliott wave trading, go to www.24elliottwaves.com. Happy trading to you all, and I will speak to you soon. Thank you for watching.